things a little bit differently this morning. First, we're going to turn on the microphones. There's a little bit of disarray in our schedule. As you may have found out in the last couple of minutes, we expect to vote on the floor any minute now. So the proposed way to proceed is that I'll give an opening statement. We'll try to allow Dr. Cohen to give her opening statement, Mr. Redmer yours, and if we can get that far, that's great. We'll then recess and we'll go over and vote. If votes are called in the middle of that, we'll have to recess earlier, and then we will pick up where we left off. It's slightly unusual to begin the committee hearing without a Democrat present, but we've cleared it with the staff. Mr. Cartwright knows that we're starting without him, and he has asked for the ability to give his opening statement immediately upon our return. So, with that being said, I'll get us started. I think it's fairly obvious why we're here today. It shouldn't be a surprise to anybody as to why you were in front of this committee. 12 of these 24 co-ops have failed. I think it's cost taxpayers so far about $2.4 billion, including in my state, where we've had a co-op fail. Based on the track record, we're here today to try and find out what the future holds for the remaining co-ops and what the future holds for the people who are counting on those co-ops to provide them with health insurance. Consumers have lost $1.2 billion in the failed co-ops, and I don't think it's fair to anyone that we just sit around and not have hearings like this. Perhaps just as discouragingly, there's a subtext here today. In addition to dealing with the merits of why the previous co-ops have failed and the condition of the current co-ops, is our inability to get information out of your organizations. It's our job to do oversight into the co-ops. It's our job to ask difficult questions. It's our job to ask you to come here today and provide us with information. It's also our job to ask you for documents that might help us in our oversight function. And we're going to have some hopefully straightforward conversations today about why those documents have not been provided to Congress. I reject the notion the administration is able to hide information from us, especially since Congress created these things. Congress is involved in the oversight, and for the executive branch to deny Congress of its ability to do its job, I think, is something that merits a very close look. It makes it look like the administration is simply trying to prevent us from doing our job. Again, we'll get into our inability to get documents as we go through there. It's even stranger that CMS is worried about the public having information about these when we know ones have already failed, and there is concern, public concern, about other ones failing. You would think that the public, Dr. Desjardins, myself, I'm on the exchanges. My staff is on the exchanges. Don't we have the right to know when we go on the exchanges what the financial condition is of the co-ops that we might choose to sign up with? You all have a tough job here today. I fully recognize that. I'm sorry that you're the ones that have to do this, but you're the ones that the administration sent over. But you've got two jobs. You have to convince the public that they shouldn't know everything about the co-ops that they might want to sign up with, and you have to convince us that you're not obstructing our ability to oversee the programs. So I don't envy those positions, but we'll try and make it as congenial as we possibly can. So with that, I'll recognize Dr. Cohen from CMS for 5 minutes for her opening statement. Want them in yet? Hold on a second. Sure. So we don't swear them in financial services. So, all right. I'm pleased to welcome Dr. Mandy Cohen, Chief Operating Officer and Chief of Staff of the Centers for Medicare and Medicaid Services at the U.S. Department of Health and Human Services, and Mr. Al Redmer, Jr., Commissioner of the Maryland Insurance Administration. We welcome you both. Pursuant to our rules, we do swear all witnesses in this committee before you testify. So if you please rise and raise your right hand. And do you solemnly swear or affirm that the testimony you're about to give will be the truth, the whole truth, and nothing but the truth? Thank you. Please be seated. Let the record reflect that both witnesses answered in the affirmative. So, with that, Dr. Cohen, and I think you've done this before, so you know about the 5-minute rule. We're not going to strictly enforce it, so if you need a few extra minutes, please take that time and go ahead and begin now.
Well, thank you very much. Thank you, Vice Chair Mulvaney. I will thank Ranking Member Cartwright when he returns, and members of the rest of the subcommittee. Appreciate the opportunity to discuss the consumer-operated and oriented plan program. CMS takes its commitment both to co-op consumers and taxpayers seriously. As you know, co-ops were created to stimulate new competition in an industry that has a long history of being very difficult for small companies to enter. with some entering markets that hadn't seen new competitors in decades. CMS's principal role is to award and oversee loans and then to maximize the likelihood that federal taxpayer funds are returned. We are in close contact with the state departments of insurance, as they, of course, have authority over all the issuers of their state and oversee the rules that the co-ops operate under. As with any new set of business ventures, some co-ops have succeeded while others have encountered challenges. Successful co-ops have provided consumers in their state an additional choice of health insurance and have improved competition. But there have also been co-ops that, for a number of reasons, have faced technical, operational, and financial difficulties. In addition, Congress has made a number of substantial rescissions to the initial $6 billion in funding for the co-op program, impacting program operations and available funding. In the face of multiple pressures, it's not surprising that some new entrants have struggled to succeed. Protecting consumers affected by co-op closures is a top priority. In each case, when a co-op is no longer offering coverage on the marketplace, we work closely with the co-op and the state regulators to facilitate a smooth transition for consumers to retain access to coverage. Each of the consumers in the co-ops that closed at the end of the last year maintained coverage until the end of the year. And after dozens of communications with co-op consumers, 3/4 of those co-op marketplace consumers have continued their coverage in a new plan. CMS plays a dual role as the loan holder for the co-op program, providing both oversight and support of these nascent small businesses. In our oversight capacity, CMS, along with the state departments of insurance, which serves as the primary regulator of insurance in the states, work aggressively to ensure that co-ops are well-run and financially sound. Every co-op is subject to standardized, ongoing program oversight activities. In 2015, we conducted over 24 financial and operational reviews, numerous in-person visits, and had many formal communications, not to mention hundreds of phone calls. When concerns are identified, CMS, in coordination with state departments of insurance, place co-ops on enhanced oversight or corrective action plans. These tools are commonly used by state departments of insurance to identify and fix correctable problems to ensure the viability of insurance products they oversee in their state. In CMS's role to support the co-ops to maximize the likelihood that federal taxpayer dollars are returned, CMS is working to make it easier for co-ops to attract outside capital or merger partner if the board chooses. We've released clarifying guidance and are exploring further steps to ease that path to outside funding for co-ops and investors, while still preserving the fundamentally member-driven nature of the co-op program. Even with the oversight and support provided by CMS and the departments of insurance, the single biggest factor for the future success of the co-ops will come from the action of the companies themselves. As new small businesses, they need to rapidly mature the fundamentals of their financial systems, tighten their operating disciplines, and hold their vendors accountable. Through the challenges the co-ops have faced, they have every opportunity to be successful and be long-term market participants. CMS appreciates and understands this committee's oversight responsibilities and has worked to provide you with the information needed to fulfill these responsibilities. I understand why the subcommittee is interested in the experiences of these private businesses, our lessons learned, and our expectations for the future. CMS has made a concerted effort to answer the committee's questions and provide relevant and responsive information, including providing thousands of pages of documents, as well as briefing by a key executive from the co-op management staff. Because some of the materials you've requested contain market-sensitive information, we have made a limited number of the co-op documents responsive to your investigation available through confidential review. As part of our fiduciary duty as the lender and stewards of taxpayer money, CMS has worked hard to accommodate the committee's request for information while responsibly protecting the competitiveness of the loan recipients and safeguarding the co-op's ability to repay federal loans. Since the enactment of the Affordable Care Act, CMS has worked to increase access to quality, affordable coverage through the marketplaces while being responsible stewards of taxpayer dollars. CMS will continue to work closely with the subcommittee, with co-ops and state departments of insurance to provide the best outcome for consumers and taxpayers. We appreciate the subcommittee's interest and happy to answer any questions.
Thank you, Dr. Cohen. Before you begin, Mr. Redmond, we've had a little change in logistics, not unusual around here. It looks like we won't be voting until 3 o'clock. So we should have a chance to get through at least the first round of questions. Mr. Redmer, after your opening statement, we're going to allow Mr. Cartwright to have his, and then we'll move into the questions. So, Mr. Redmer, you have 5 minutes. Mr. Redmer, if you hit the button in front of you, turn the microphone on.
Mr. Chairman, members of the committee, I appreciate the invitation to be here today. My name is Al Redmer. I'm the insurance commissioner in the state of Maryland, and I'm here today to offer my views on the risk adjustment program based on Section 1343 of the Affordable Care Act and its impact on a co-op incorporated in Maryland, but just as importantly, as well as other co-ops and small insurance carriers around the country. Evergreen Health Cooperative is a Maryland-based co-op created under the Affordable Care Act. It's been in business since 2014, and if you look at the Affordable Care Act and the reason that these organizations were created, Evergreen is a compelling story. If you look at the objective of increasing competition, focusing on medical outcomes, improving the health outcomes of patients, medical management, disease management, it is a success story. For example, Evergreen offers a value-based product for diabetic patients that removes virtually all financial barriers for the patient. No co-pays, no co-insurance, no deductibles, to help folks be treated to prevent the onset and the increased problems with the disease. Any small carrier in any company, any new company in any industry has a challenge. They have to reach a certain size to pay for the infrastructure to run that business, and Evergreen and these co-ops are no different. They need to reach scale. Evergreen's enrollment as of January of this year is 36,000 compared to just under 20,000 in July of 2015. Additionally, they have diversified their portfolio. They're not just on the exchange. They do business throughout the individual market. They're in the small group market. They are also in the large group market. And their medical loss ratio is favorable. It's been running between 80 and 85%. Based on current enrollment trends, Evergreen is on track to reach their 2016 enrollment goals and turn a profit by the end of this year. Over the past few years, around the country, we've seen new, innovative health insurance plans that have been created that are providing enhanced competition and patient care, and it's working. For example, at the end of 2004, our largest individual carrier in Maryland had a 91% market share. Today, it's down to 57%, due in part to a more competitive marketplace. These new carriers have the ability to continue, but their ability is severely jeopardized by the adverse and potentially fatal effect, financial effect caused by the technical shortcomings of the current risk adjustment and risk corridor programs. The failure of these plans would be disruptive to the marketplace, and state insurance regulators believe that a competitive marketplace benefits and protects the policyholders. The risk adjustment formula is specifically of concern because it's proven that new carriers have a distinct advantage, and I point out new carriers whether they're a co-op or not a co-op. For example, the risk adjustment formula quantifies an enrollee's health status based on their age, sex, and diagnoses recorded during the course of the year. New carriers have limited ability to get that information on the health status and previous claims history for the applicant. So you can imagine a new small carrier, they don't have the infrastructure, they don't have the staff, they don't have the technology that these large carriers that have been doing business for decades possess. Therefore, the carrier's population may appear to be healthier than it actually is if some diagnoses are not captured, which may result in an improper risk adjustment payments. And let's contrast that with the risk corridor. So the risk corridor last year resulted in our co-op receiving 12 cents on the dollar. So the plan's established, we booked this amount of money, but they received 12 cents on the dollar. Now with the risk adjustment formula, they're going to have to write a check at 100 cents on the dollar. Any business that's going to collect 12 cents on the dollar and pay 100 cents on the dollar, that math does not work. And when you take that math and you add it to the Affordable Care Act that mandates a certain medical loss ratio, they can't raise their rates and collect it with premium, because if they do, they'll bump below the medical loss ratio and they'll have to pay that excess money back to the customers that they serve. The NAIC has urged CMS to review the formula and work with carriers and state regulators to make adjustments for 2015 and 16 to ensure that it's providing appropriate protection for all carriers, but we really can't wait for 2017 or 18 to enact those reforms. There are several immediate solutions that would provide financial relief while technical corrections are developed. Among these are exempting new and fast-growing plans from the risk adjustment for, say, the first 3 to 5 years, or limiting the amount that the carrier pays for just risk adjustment to perhaps 2% of their annual premiums collected in the year. Mr. Chairman, members of the committee, I appreciate the invitation to speak. I encourage you to consider immediate solutions which would provide stability in the individual and small group market and allow these companies to provide overall benefits to the marketplace, again, across the country. And with that, I'll look forward to your questions.
Thank you, Mr. Redmer. We'll now recognize Mr. Cartwright for his opening statement for 5 minutes.
Thank you, Mr. Chairman. And thanks for holding today's hearing. I'd also like to welcome our witnesses, Dr. Cohen and Commissioner Redmer. Thank you for being here and appreciate your testimony. The co-op program was established, of course, to bring competition to the health insurance market by encouraging the development of nonprofit, consumer-focused insurance companies. Many co-ops have done just that, providing quality care to more than 1 million consumers at competitive prices and accordingly driving down premiums in those places. Of course, like any other startup, co-ops face challenges in addition to competing against larger, well-established, some might say entrenched insurance companies that have dominated the market for years. Co-ops lack the claims experience and the detailed textural knowledge of the markets that insurers have to rely on accurately to predict their products. Co-ops are also prohibited by law, this is interesting, from using loan funding to market their plans. So it's like their ability to speak has been cut, and it's hard to attract new customers when you can't advertise with all of your resources. But co-ops have also long been the target of Affordable Care Act opponents who view this program as one more opportunity to attack the law. And this is getting tiresome, of course. The ACA authorized $6 billion for the co-op program. The following year, Congress cut $2.6 billion of that $6 billion authorized. And then the American Taxpayer Relief Act of 2012 further cut the program's remaining $3.4 billion by 90% and put what little was left into a contingency fund, effectively preventing the creation of any new co-ops. So if you're scoring along at home, it adds up like this. Congress has gutted about $4 billion of the $6 billion that was originally appropriated for the program, and now we're here to criticize how they did after we cut their legs off at the knees. I hope we're not really here to do that. On top of these cuts, Congress voted last year to gut the risk corridors, one of the ACA's risk mitigation programs. As a result, insurers will receive only 12.6% of the expected payments for 2014, roughly 13 cents on the dollar for every dollar they expected to receive. Republicans in Congress have always focused more on tearing down the ACA than making it work, and I think that's what we're up to here today. They've taken more than 60 votes to repeal or undermine the ACA, never voting on any kind of replacement of their own. We are hearing today about co-ops that are operating under corrective action plans or enhanced oversight plans. But it's important to understand the challenges facing these co-ops so that we can learn from this going forward. Being under a cap or an EOP does not mean that an insurance company is in imminent danger of failing. In fact, our committee staff, both Democratic and Republican, spoke with the insurance departments of states in which co-ops currently operate under a CAP or an EOP, and they have all approved these co-ops to offer coverage this year. They have also, importantly, informed us that there are many other insurance companies, for-profit insurance companies that are not co-ops, that have also been put under corrective action plans, consent orders, or similar remedial actions at the state level for some of the same issues facing the co-ops. So I understand the argument that consumers have a right to know about their plans, but we shouldn't game the market by selectively targeting only co-ops when the larger picture is that they're struggling across the board. If we want consumers to know about their insurance plans, let's look at all of them, not just the ones you want to call Obamacare. Now, I will say I don't believe we should release any of the confidential regulatory information that we have obtained about the remaining co-ops in a way that would mislead consumers about the insurance companies in their states or prejudice the ability of co-ops to operate going forward. But going forward, I would commit to working with the chairman on a broader, comprehensive review of these programs in a way that actually helps consumers make informed decisions. And I hope we can use today's hearing to learn from our expert witnesses about what's going well in the co-op program, what needs to be improved, and how we can work together to make this program succeed. I thank you, Mr. Chairman. I yield back.
Thank the gentleman from Pennsylvania. We now recognize the gentleman from Tennessee, Dr. Desjardins, for 5 minutes for questions.
Thank you, Mr. Chairman. I thank the witnesses for being here today. As I continue to listen to the rhetoric from the other side of the aisle, we can pretend that Obamacare is popular, but it's not. People didn't want Obamacare. They didn't want socialized medicine when it was crammed down their throats several years ago. To sit there and demagogue Republicans for just trying to make this into something it isn't is disingenuous, and today's hearing is a great example of why one of the reasons this is failing. Dr. Cohen, what qualified CMS to set up and provide oversight for these co-ops in the first place?
The Affordable Care Act provided the statute and the funding for the co-op program.
Okay. Did CMS have any qualifications or experience in setting up these type of programs and overseeing them?
Well, we do. CMS also obviously runs Medicare, the largest insurer in the country. But in terms of how we decided on the co-op programs themselves, obviously they are private businesses. We had a panel of experts, both externally and internally, whether it's insurance experts and actuaries and others, who reviewed co-op business plans before making decisions about who would be awarded the loans.
Okay. And I guess at the beginning it was accepted that probably only about 60% of these loans at best were going to be paid back. So I question, why weren't they just called grants, or at least a large majority of the money? So
they're very much loans, and we do very much expect to get taxpayer dollars back for those loans. And that's what we intend to do.
Okay. How many co-ops were initiated?
24.
Okay. How many of them are still in existence?
11.
11, so more than half have failed?
Yes, that is correct.
And
there is only 11 currently operating.
And so that loan money we're probably not going to recoup, right?
So we are in the process of recouping that loan money right now.
How much money are we talking?
So we've just started that process, as most of these co-ops have just shut their doors about 6 weeks ago. So we go through an extensive process of making sure they continue first their claims run out, and then we'll look at their, the excess revenue, and then use all the tools available to us through their loan agreements and state and federal law to pull back federal tax dollars.
Okay, Tennessee had Community Health Alliance, or CHA. By the end of 2014, they had only had about 2,300 members out of a projected 25,000, resulting in a loss of $22 million for the year. In 2015, they actually lowered the premiums to try to entice membership, and boy, did it work. It jumped up to 35,000 by May of 2015, but it grew so fast during the open enrollment period that CHA had to suspend enrollment plans. They proposed an increase in premiums because obviously it was too affordable, kind of a bait and switch, if you will, of 32%, but the regulators asked to increase it to 44%. So for these poor people that decided to take a chance on this co-op, they came in at a certain rate, had their rates almost double, and then it was determined by the end of the year that it was no longer sustainable, and they shut down. So a cap was imposed on Community Health Alliance on September 29th, and then just 2 weeks later, it closed its doors. How can you say that these corrective measures are useful when 50% of the co-ops subject to caps have failed?
So we use the corrective action plans when we identify something that we believe is correctable. In the case of Tennessee, obviously, we were identifying problems, and then we saw additional new information that came to light about their finances, about what happened in Q2 of their claims experience. As you're mentioning, they were highly enrolled, so they had a lot more. Their consumer base was extremely high to their premium that were coming in. And so we, along with the Departments of Insurance, need to make some tough decisions about wanting to make sure that consumers had continuous coverage and didn't want them to enter the next open enrollment period if they couldn't make it through the whole next year. And so we, along with the Department of Insurance, said that they were no longer going to be operating.
And this is not just Tennessee. This has happened in a lot of states, correct?
We have shut down 11 co-ops, that's right.
11 co-ops. So what do you tell a person that's going to look for insurance? Why would you recommend anyone looking for insurance or their family to go to a co-op?
Well, that's why we did the tough work at the end of last year before the open enrollment period started. We, along with the state departments of insurance, took a seriously hard look at these co-ops to make sure the ones that would continue forward, we had the confidence would make it through 2016 for their consumers.
But you say that this CAP program is the solution to fixing these problems. How many programs were under caps that have failed?
So I don't think the cap is the only solution. I think the co-ops themselves are really the ones who are going to be the ones to determine whether or not they ultimately will be successful. They have a lot of work to do to rapidly mature their entities. They're small businesses, as you know, and they're still getting their foothold on this business. So I think caps are one way for us to identify correctable problems, but certainly the state departments of insurance are doing their own work as well.
Yeah, but bottom line, the CMS was given in excess of $2 billion to help oversee these, and over half of them have failed, but yet you're asking us to have the confidence to continue to support organizations that are obviously failing, and it's awful difficult, I would think, to attract people. It's a big inconvenience for these people to go sign up for insurance, have their rates jacked, and then told that they're canceled. So, I mean, I think we've got a lot bigger problems here. I see my time has expired, but maybe we'll get to a second round of questioning.
Thank you, gentlemen. Now recognize Mr. Cartwright from Pennsylvania for 5 minutes. Give or take.
Thank you, Mr. Chairman. Well, now, Dr. Cohen, thanks for being here again. And I said some things in my opening, and I want to confirm them with you. One of them is this idea of establishing the co-ops. The idea is that we're going to provide competition, and we're all good capitalists in this room, and we know that the more competition there is, the lower prices will be for consumers. Is that a fair statement?
That was the idea for the co-op program, to not only provide an additional choice for consumer, but one that was consumer-run.
So a central capitalist principle underlies the whole idea for co-ops, right? That's
right, private businesses.
All right. And the other idea was we were going to help fund the co-ops to get on their feet and get going. And how much did the Affordable Care Act appropriate for the co-op program in the first time?
Originally, it was $6 billion.
$6 billion. And I understand Congress on several occasions has cut the co-op's funding. Am I correct in that?
That is correct.
Is that 4 times?
I believe that's right.
4 times they've cut. And the year after ACA was passed, Congress voted to cut a total of $2.6 billion from the program, right?
That's right.
And then in 2012, Congress rescinded 90% of the remaining $3.4 billion on the program, right?
That's correct.
And then finally, sequestration cut an additional $13 million in funds from the co-op program, right?
You can see why they had some challenges.
Okay. Well, now, Dr. DeJoy brought up the fact that some of these co-ops have failed. You don't need to be a rocket scientist to say that cutting and cutting and cutting the funding is going to be a big part of why some of these co-ops failed. Would that be a fair statement?
That would be a fair statement.
Would the gentleman yield just for a quick question?
Certainly.
Okay, you'd pointed out the funding at $6 million. Originally, there were
$6
supposed
billion.
to be $6 billion. There were originally supposed to be co-ops in all 50 states. There were only 23 or 24. So obviously, we did save the taxpayer a fair bit of money by cutting that amount.
Reclaiming my time, actually, in terms of saving the taxpayers' money, a lot of this is loan money, isn't it, Dr. Cohen? And it's coming from CMS. The lender is CMS, your agency, and your plan is to get the money back for the taxpayers, right?
That's right, the money is from the Treasury.
But if we kill the co-op, it's not going to pay us back, is it?
That's why we are trying to support the co-ops for them to succeed. If they succeed, we succeed.
Right, thank you. Now, unfortunately, cuts made by the program last year resulted in insurers receiving only about 13 cents on the dollar of payments they were expecting. Commissioner Redmer, I want to direct this to your attention. Your opinion, how have changes to the Risk Corridors program affected co-ops and other small insurance companies?
Well, they've affected them a lot. And let me go back and point out that all of the co-ops are not failing. Again, in Maryland, we have a successful, compelling story. And I would like to add that this risk adjustment formula that I've chatted about previously is not just affecting co-ops. It's going to affect all of these smaller companies around the country, some of which, a lot of them, have no taxpayer money at all. These are all private organizations. But as I mentioned previously, if you are collecting money under the risk corridor and you're paying money out under the risk adjustment formula, any business, if you are going to collect 12 or 13 cents on the dollar and you're going to pay out 100 cents on the dollar, the math just does not work. And that has already proven to be fatal on the corridor side to some of the co-ops, and I'm concerned that if we do impose that 100 cents on the dollar risk adjustment formula, that it may prove to be fatal to other organizations around the country.
I appreciate your comments. And Commissioner Redmer, you've been appointed as insurance commissioner by a Republican governor, and you're a former Republican state legislator yourself. Why do you think it's important to help the remaining co-ops succeed?
When I walked in, if I could have written the ACA differently, I probably would have. If I could have written the exchange law in Maryland, I probably would have. But I walked into office January the 21st of last year with a business that was providing competition to the marketplace. And if again, you go back to the Affordable Care Act, and I don't want to relitigate that, but if you look at the objectives of increased competition, improve medical outcomes, focusing on medical management and disease management, this specific organization is a success story. They've got a compelling story to tell. They're insuring 30,000 Maryland citizens. We've seen improved competition, and my perspective is that it's worth the investment of my time and effort to try to help and save that organization.
Well, thank you, Commissioner Redmer. And 30,000 in Maryland. And Dr. Cohen, how about nationwide? I've said it's more than 1 million people who are enjoying the fruits of having health insurance because of the co-op program. Am I correct in that?
It was a million people as of last year, yes.
As of last year, 1 million people. Mm-hmm. Well, thank you both, and I yield back, Mr. Chairman.
I thank the gentleman. You had an extra 24 seconds. We now recognize the gentleman from North Carolina, Mr. Meadows, for 5 minutes.
Thank you, Mr. Chairman. Dr. Cohen, you're not here to suggest that if the co-ops go away, that those 1 million people would be uninsured, are you?
No, luckily they have other choices.
Right.
To the
Okay. Let's make that clear, Mr. Cartwright. And so as we look at this, one of my concerns, I guess, that I have, Mr. Redmer, is as you have gone over this business model, how much longer should the American taxpayer be on the hook to make sure that these fledgling startups make a profit?
I can tell you.
And since they're nonprofits, I guess that's
Sure.
not the correct word, but become financially solvent.
The Evergreen has been profitable on a monthly basis in 2015, 4 months out of 12. Their loss in 2015 was reasonable. They are projected to be profitable.
But without the risk corridor, will you be profitable? Will they be profitable going forward?
If we...
Because I think your testimony
Yes.
would suggest they would not.
No, they would be profitable. If they are left alone in 2016, they will be profitable for 2016. The problem is the risk adjustment formula. If they have to stroke a check for $1 million or $2 million or a number like that, that's not going to be an issue.
But wasn't that part of their business model when they went in? I mean, didn't they? I mean, the ACA has been very clear, so I
Sure.
mean, that's not like it's, you wake up and you have a shock that this is going away.
You're exactly right. However, also part of the business model was the risk corridor payment, of which they received 12 cents on the dollar. So if they would have...
But again, I would stress, that's not new news. This is not breaking news. I mean, we changed the models and we've started to look at this, but part of the ACA rollout has been consistent from day one. They would have these certain subsidies and certain risk corridors in place. They would eventually go away once they're there. And I guess my question still remains, how long should we keep everything subsidized in hopes that we have competition?
I don't know that we need to give them subsidies. I think we need to leave them alone.
All right, so let me ask you maybe a different question. Since you have a very successful co-op, how much has that co-op affected the premiums? Have premiums gone down on health care overall in Maryland?
I believe the premiums are more moderate than they would otherwise be.
Have they
But
gone
no,
down? Yes, they have not.
There has not been any premiums going
So what you're saying is they may have affected the rate of growth.
Yeah.
Co-ops may have affected the rate of growth.
Sure.
So how many people do you have insured in Maryland?
I don't have that number off the top of my head.
What would you guess? Millions?
I'm going to say, oh, yeah, sure.
All right. So how do you think the competition of 30,000 people really affects the premiums of millions of people?
I'm not going to guess as to what it's going to affect.
Well, I'm a business guy.
Sure.
It's got very little impact, and I guess here's what my concern is.
Well,
Dr.
but if I could say that we're talking about 30,000.
If you want to talk business, I'm ready all day long to jump right in the depths of this.
Sure,
I would encourage you to probably not go there, but go ahead.
I'm trying to answer your question. The 30,000 lives have been there, have grown in the last couple of years compared to insurance companies that have been doing business for decades. So naturally, even if you are lower and you're moderating prices, the acceleration of growth is not going to be as significant as if they were all the same size and the same age.
Well,
but you're right, they're not reducing
all right.
rates.
So, Dr. Cohen, let me come to you, because what has been alleged, and certainly you know that I'm no fan of the ACA, but let's look at the co-op as a separate entity at this particular point. You have 11 co-ops remaining, is that correct?
That's right.
And so out of those 11, how many of them would have a corrective action plan in place or some kind of enhanced oversight right now out of the 11 remaining?
More than half,
How many?
7.
Okay. So we have 4 co-ops out of all the co-ops that have been. So we've got one example in Maryland. So we, surprise, surprise, we happen to have the one good example, but 4 out of most of them. That is not really a successful business model, wouldn't you think, Dr. Cohen?
So when we think about corrective action plans, it is us trying to identify a correctable problem. So we are working very hard with these co-ops, and I know they're working individually to remedy the issues that we have identified.
All right, so out of those 7, how many of those do you think will be doing business in 2017? Because you were real careful in your response. You said they were going to be able to provide coverage for the rest of this year.
You're right.
And let me tell you why I'm asking is because I don't think co-ops necessarily are affecting the market because they're such a small
That's right.
part of it. And the other is I've got huge healthcare providers that are hemorrhaging money under this program because they're trying to figure out the risk and all of that. And as a guy who's started 12 small businesses, this is not one where I would try to wade in and try to compete with the big boys. And I guess what I would ask you to do is to make a realistic assumption, and I'll pretend I will actually agree with Mr. Cartwright that I will not use it as to bludgeon the ACA, but I would ask you to get back to this committee on really should we continue the program or not. And with that, I appreciate the indulgence of the chair.
I thank the gentleman. Now recognize the gentleman from Georgia, Mr. Heiss, for 5 minutes.
Thank you, Mr. Chairman. Well, fortunately, Georgia has not been impacted by the collapse of the co-ops, but several of our neighboring states have. South Carolina, some 67,000 from South Carolina are now trying to seek new insurance. Tennessee, somewhere in the ballpark of 27,000. And as I understand it, predictions are close to 750,000 have already lost their health insurance with little to no notice that this was coming. And you know, I'm troubled, as you just shared, we've got at least 7 more that are in danger. I'm troubled with the reality that this same fate is probably going to continue to many more Americans who likewise are probably not going to be notified. You know, and here we're dealing with people who were forced to get insurance and to go this route, and now all of a sudden it's evaporating, and they have no notice whatsoever. They find themselves scrambling around trying to find insurance. And let me just ask you personally, in light of all of this, if you were one of these people, would you want to know? Would you want to be notified that your insurance was about to be taken away?
So a couple of things. One is we certainly share your concerns about these small businesses, and that's why we're doing the aggressive work that we are on the oversight side. What I would say is what we are trying to do on the oversight side is a tool that is used by departments of insurance all the time to identify correctable problems, and we believe that they are. Again, we learn, we get additional data and make different decisions as the years go by. Our primary goal is to make sure that consumers can have continuous coverage, which is why at the end of the last year we did.
Well, my question was, would you want to be notified if you were about?
So I know that the Department of Insurance it has the voice of the consumer when they're thinking about when to notify consumers about issues related to.
So would you want to be notified?
At the appropriate time. I know that the Departments of Insurance are thinking about.
Okay, well, you just mentioned that there are 7 that are in danger. At what point is an appropriate time to notify these people? Which of the 7 is most likely to fail next?
So first I should pause, and my team corrected me that 8 are on caps. So the number is 8. So the appropriate time is when the Department of Insurance that regulates this process of communication tells us that that's the right time. Again, we're the loan holders here. State Departments of Insurance are the primary regulators, and so they sort of govern this space about notification. We don't want to have consumer.
All right, well, apparently the insurance side is not getting the job done either, because we've got 750,000 Americans who, with little to no notice whatsoever, lost this. And you are jumping all over the place when it comes to facing any responsibility that Americans ought to be notified of this. Which of the 8 is most likely next to collapse?
So we are at a very early point in the year. We did some tough work at the end of last year to make sure that consumers could have confidence in the co-ops that were continuing for 2016. We are just learning about what the co-ops did in terms of enrollment during the open enrollment.
Again, that's not my question. Do you know which one is in the greatest danger?
I can't say at this point. I don't
All right,
have
we've
that
got
information.
billions of dollars on the line, American taxpayers on the hook for this. Don't the taxpayers deserve to know? You know, if you're making a business decision, is this a business venture you'd want to be a part of? I know we've got, from info that I've got, we've got one of the co-ops now projecting a 78 million loss as opposed to what was supposed to be a 4 million gain. I mean, this is a horrible venture. How many of the remaining co-ops are actually profitable? 3? Is that what we're looking at?
So we know that small businesses always struggle to turn a profit in the first few years. It's a matter of, in this entrenched business, I think as the Congressman mentioned before, these are tough markets to break into. There is a certain amount of loan funding that we can offer from the federal government, but what we're trying to do now is encourage these co-ops to look for outside capital, additional resources to bring in, thinking about selling in the small group market in addition to the individual market, maybe even the large group market, and again, thinking about how they're going to sustain themselves and be viable over the long term.
All right, let me just, let's last thing, and my time's about up. Let's walk through the process of what happens when a co-op closes. Do they continue to draw money from the federal loan?
So when the co-op closes, it's a decision between CMS and the Department of Insurance. When that wind down starts, that doesn't mean the co-op is closed. So we started wind down processes in the September, October timeframe, but consumers were able to continue coverage until the end of that year.
So they continue drawing federal loan money?
So the loan money had already been awarded. There's no new dollars that go out the door. All of that loan money.
So even when they close, loan money continues going out the door?
So no, when they close their doors, there's no additional loan money, so, because that was already awarded to them. There's obligations of money that they need, that they're on a payment cycle, if you will, but that money had already been awarded.
Mr. Chairman, thank you as well for your indulgence.
I thank the gentleman. We now recognize the gentleman from North Carolina, Mr. Walker, for 5 minutes for questions.
Thank you, Mr. Chairman. I'd like to thank Mr. Cartwright from Pennsylvania for being present today. Defending the various components of the ACA I know is difficult, but I would hope that my friends on the other side of the aisle would be concerned about the constituents and the losses here of some of these co-ops. Mr. Redmer, I believe about 10 or 15 minutes ago, if I remember correctly, you said all of the co-ops are not failing. Can you tell me what percentage of failing co-ops needs to take place before you feel like there's a problem?
I didn't say there was not a problem. I said that not all co-ops have failed, and we have one in Maryland that is performing reasonably well, and that's the extent of my knowledge and interest is the Maryland co-op.
Okay, well, speaking of Maryland, last November, just as the open enrollment period was starting, the CEO of the Maryland Co-op testified before the Energy and Commerce Committee. He did acknowledge that the CMS has placed the Maryland Co-op under an enhanced oversight plan. Does CMS have any evidence that the Maryland Co-op was adversely impacted as a result of that public disclosure? And I can, Mr. Redmond or Dr. Cohen, whoever feels more comfortable in answering that question.
I can't answer whether there was any effect of that being disclosed or not.
Dr. Cohen?
So I'm not aware of that situation.
Okay. Well, as a matter of fact, 3 days after his testimony, the co-op CEO was in the press projecting increased enrollment. That's interesting. Is there anything that's being hid here from the public? Do you have any information regarding what was going on there, Dr. Cohen?
So regarding the Maryland Co-op, I'm sorry, I'm not following the question.
Okay, let me ask it again. 3 days after his testimony, the Maryland Co-op CEO was in the press projecting an increased enrollment. It seems like there's a continuance to refuse to comply with the committee's duly authorized subpoena. Any evidence of that?
I didn't realize the Maryland Co-op was under subpoena by this committee.
Okay, all right. So well, let's go a different direction since it sounds like that information did not get to you guys. Okay, we want to be fair with that. Let me go back to question earlier because I didn't know if I heard a definitive answer. Of the taxpayers' money that the administration was loaned out to the co-ops, do we have a range, a number, speculation of how much will actually be paid to the taxpayers?
So we're working through that process right now. As mentioned earlier, again, the co-ops that wound down at the end of last year are now going through a process of doing their claims run out, understanding what revenue that has coming in. Some of them are taking actions with their vendors. And then we go through a process based on the loan agreements and the state law to use all of the tools at our disposal to get the funding back.
Sure. You would understand why the word process is probably overused in this town a good bit. Is there any way that you can put any kind of numeric value to that?
I can't at this time. It's a really case-by-case process. It's led by the Department of Justice, who leads these because it's a federal loan. And so it's a process we'll work through, and it's too early to speculate.
is there a percentage of how much that we would want the co-ops, 25, even if there's not an exact dollar amount? Is there a percentage goal, benchmark? Is there anything like that that's been
certainly
determined in the process?
It's certainly as much as we possibly can within the confines of the loan agreement and the laws.
Okay. Thank you, Mr. Chairman. I yield back the balance of my time.
I thank the gentleman. Will now recognize Mr. Wahlberg for 5 minutes.
Thank you, Mr. Chairman, and I apologize for being a little late to arrive, so I hope I'm not asking some questions that have been asked already. But to Dr. Cohen, thank you for being here. Major insurers, as we've been aware in the reports in the media, have sustained significant losses on their exchange plans and have been pessimistic about the profitability of their plans. In 2015 and 2016, the records show that United Health expects to lose $1 billion on exchange plans. The company's CEO has even stated that entering the exchange was, and I quote, for us a bad decision. United might quite quit exchanges altogether in 2017. Aetna has lost money on plans sold through the exchanges, and its CEO said, and I quote, "We continue to have serious concerns about sustainability of the public exchanges. Humana's losses might drive it from the exchanges. Most major insurers seem unable to make a profit on the exchange." If that's the case, if major insurers can't make it on exchanges, why should we be optimistic that co-ops will?
Well, we're very confident about the fact that the marketplace grew over the last open enrollment period with 12.7 million consumers in the marketplace now. And if you look at a Kaiser, a Centene, Molina, others, they are seeing strength in the marketplace and looking to expand. And so we think that it's a growing market. We share your concerns about the co-ops and their ability to be successful in an entrenched market. They certainly have a lot of barriers that they needed to overcome. And so that's why we're doing as much work as we can on the oversight side to make sure that they're making good decisions with taxpayer dollars.
Well, I guess the time will tell on that, but we're talking of significant organizations that have seen that it has been a bad investment. So hopefully it will be a turnaround. The administration has requested more than $1.8 billion in emergency funds to combat Zika. $828 million would go to the CDC, $200 million would go to NIH and FDA. A separate committee investigation into this administration's Obamacare spending has revealed that during the Ebola crisis, HHS propped up Obamacare by taking money from CDC and NIH and giving it to CMS. Over $14 million from CDC and over $75 million from NIH, if the records are correct. By HHS's accounting, over $1 billion in Obamacare funding has come from the systematic rating of funds from other programs utilizing the Secretary's transfer authority and non-recurring expense fund. Based on that track record, Dr. Cohen, how can we be confident that any Zika funds would be spent on their intended purpose and not instead used to prop up co-ops or other pieces of Obamacare?
So I can't speak to the Zika funding and how that will be spent, but what I can say about the funding for the marketplaces is that now that we are on stable footing with 12 million and more consumers, we are able to charge user fees to the issuers through that, and that is what sustains the marketplace in terms of its viability and to cover its operational costs.
I yield back.
Will the gentleman yield for a second?
I would yield.
What was the break-even point? You say now that we're at 12 million consumers, that you're self-sustaining.
No, I said that is the funding that we use to cover the marketplace operations
Well, but
work.
to the gentleman's point, he said, are we going to reprogram the money? And you said that now we're at 12 million, we don't need
That's not what-
So maybe I misunderstood, but I'm just trying to get a clarification on
what
the
I said is,
gentleman's point.
I don't know about the funding for the Zika program and who it's getting funded through.
No, his point
essentially.
is that other monies had been reprogrammed
It's been shifted.
and shifted to prop up Obamacare. That's his point, and what you're saying is because is your testimony here today, and is that there will be no shifting of funds to prop up any part of Obamacare from here on out?
So I think what you were asking is, would the Zika funding be used to prop up the market?
No, that was an example of how Zika funding has been used, it's been shifted, and that's the question.
Well,
If that's the pattern, we're concerned that the dollars aren't there, and we'll be shifting it from other funds.
Understood. So, and that's why the user fee will cover the marketplace operations. In addition, obviously, the secretary has at her discretion to move money within the department to cover whether it's Zika or Ebola or marketplace, whatever important action of the moment is needed across the country.
That's concerning. So, anyway, I yield back.
Thank the gentleman. I'll recognize myself for 5 minutes. Dr. Cohen, during your opening statements, you said that one of your jobs was to make these loans to the co-ops and to work on getting them back. I understand there's $1.2 billion outstanding on those, or is it it's full $2.4 billion is outstanding on the loans, isn't it?
Well, they are making loan payments, but that's in the right ballpark, yes.
Let's talk about these loans. What kind of loans are they? Are they secure? Are they priority? Tell me, when you loan money to the Maryland, if we use Evergreen for an example, what is the nature of that loan?
I'm not the loan expert, but I can be happy to follow up and provide that.
Is it secured by any of the assets of the entity?
So I don't know that I can answer that question.
Okay. Do you know the priority of repayment?
Yes. So obviously, for federal loans, there's an order of payment. I believe that we are at the very top of all of the creditors when we are going back, but that is, I will say, on a case-by-case basis in different states. There is a different makeup of where the federal loans and federal obligations fall in the order of who gets paid back first, which is why it is a case-by-case process that the Department of Justice runs.
Okay, so is it your testimony then, because we've had information that indicates that at least on some of the co-ops, you've allowed them to reclassify the loans as what they call surplus on their balance sheet.
Okay, gotcha.
Is it your testimony that that's because of state law, or have you made a decision to allow that to happen?
So I think you're talking about the loan conversions.
Sounds like it.
Those are ones that are requested by the co-ops themselves. And if we are going to make a determination to move some of those and convert those loans, we do that in coordination with the state departments of insurance. So we don't okay any of those conversions without the State Department of
When you
Insurance.
say conversions, I'm sorry to cut you off, but you're using a term that I'm not familiar with. What are you converting them to? From loans to what?
So on their balance sheets, so whether they can see it as, I'm going to use the wrong terms because I'm not the financial person, but be able to show that they have risk-based capital. So it allows them to show that they have more risk-based capital on their balance sheet.
Okay, all right. Now you
But
have my
you might
attention.
want to ask
No,
my
I will stay right here for a second.
commissioner. Yeah.
You allow certain co-ops to use loans from the federal government that used to be prioritized loans to count those as capital on their balance sheet for purpose of meeting their risk-based capital requirements.
That's correct.
And that doesn't scare the hell out of you?
That's allowed under law, and it is something that
What
we
law?
do.
Okay, and you can ask somebody behind you if you want to. Is there a specific section of the law you want to cite on that one?
I'd be happy to have one of the lawyers follow up with,
All right.
with our
Do you
authority.
agree with me that it undermines the whole purpose of having risk-based capital in the first place by allowing them to count a government loan as capital? Do you understand the difference? And Ms. Garland,
Absolutely.
a lot of people don't
Absolutely.
understand the difference between loans
Yep,
and capital.
yep,
So
understood. And we very much share your concerns in this space, which is why it's a quite rigorous process from the time a co-op would request something like this until we would be able to approve it. And it requires a full review of their entire business process and their financials, involves coordination with the state departments of insurance. And so we have turned a number of them down because of that. But we do want to be flexible, again, for these co-ops when, as I've mentioned, if they are successful, we get those taxpayer dollars back. And so we are trying to use our tools to be flexible and help those co-ops.
let's talk about your efforts to get them back. I've heard from some of the co-ops that the payments, the reinsurance payments have slowed up. Are you withholding reinsurance payments from any of the co-ops, whether they are ongoing, they are winding down, or they are closed, in order to offset the loss from the loans?
So each of those are, again, on a case-by-case basis.
Okay, does that mean that
depending
in
on-
some cases the answer is yes?
So most of the time, the decision has not yet been made, so I think it's too early to say.
Okay, then let's talk about when you say most of the times the decision has not been
In-
made. Let's talk
they have
about the
not-
times.
They have not been made. They have
In-
not been made in the wind downs of the
in
co-ops.
any of them.
No,
So
that
it's-
is an ongoing process.
It's your testimony here today that you are not withholding any of those payments from any of the winding down co-ops.
So at this time, the Department of Justice runs this process, and I'm happy to have them come and answer questions about how the process would work, but right now we are not.
When do you think you're going to make a decision on that?
I would have to consult with the Department of Justice on the timing of those decisions.
Okay. All right. I understand that Mr. Jordan has joined us. We'll get one more question in our first round. I'll recognize the gentleman from Ohio, Mr. Jordan, for 5 minutes.
I thank the chairman, and not exactly sure where the hearing has went thus far with the questioning. So let me just jump in with some different things here, maybe. So this all started. It's been in existence for 2 years, right? January 2014 is when the first co-op started operation. Is that right?
That's correct.
And you had 100 and some, over 100 applicants, but you approved 24?
That's right.
And of the 24, 12 have already failed.
12 are close, yes.
12 have closed, failed, whatever word you want to use. Okay. And last year, I understand, while maybe 24 were still operating, you visited 16 of the co-ops. Is that accurate? Site visits?
That sounds right.
16 of the 24. Were there still 24 in operation starting January 1st of 2015?
No, there were 23. Vermont never
got going.
got their state license.
Okay, so the
Yes.
ones who got approved and actually started insuring American citizens, 23. You visited 16 of the 23 last year.
That's correct.
Okay, so of the 7 you didn't visit, have any of them closed?
I don't have the list of who we visited and who didn't, but I know we prioritized those that we had concerns about.
So, okay, then let me ask it this way. The 16 you did visit, were all 12 in that 16?
I don't know, but I can follow up and let you know.
All right. Of the 12 who are still in operation, how many do you anticipate are going to collapse this year?
Again, it's too early to know about what will happen over the course of this year. We did a lot of work at the end of last year with our colleagues at the State Departments of Insurance to make sure that we felt that these co-ops could operate.
Let me ask, maybe this has been
throughout
asked
the
by
year.
the chairman or some of the members. Of the 12 still in existence, how many are meeting enrollment projections?
I can't speak to the specifics about any one of the co-ops, but that's definitely a factor that we look at, and we're only first getting in the data about
Is that
how-
one of the things you look at when you go out on these site visits?
Absolutely.
But you can't tell me.
So I can't speak to that right now, but I'd be happy to follow
Are-
up with details.
One of the 12 meeting enrollment projections, or 5 of the 12, can you give me some numbers?
I think some of them are over-enrolled, and sometimes that's their concern, and sometimes they're under-enrolled, so it depends on the particular circumstance.
How many of the 12 still in operation are currently profitable?
I couldn't say how many are profitable. I think that we know that small businesses are going to struggle to turn a profit in the early years, and it's too early to know what their balance sheet is going to look like for 2016.
You don't know if these places that are still, I mean, half of them have already collapsed, closed, your term, costing the taxpayers over $1 billion. Of the 12 that are left, you can't tell me which ones you visited or haven't visited, what the enrollment projections are, and whether they're meeting their enrollment projections, and whether they're profitable or not. That's the kind of stuff we kind of want to know in this hearing.
Understood, and I'd be happy to follow up with those
I mean, there's only
specific
12.
details.
It's one thing if it was 100. There's 12 still operating. You've lost half of them, and I'm asking you about those 12 still in operations. Who's making any money, right? Who's meeting their enrollment projections, and who'd you visit?
I
You
can
can't tell
follow
me
up.
out of those 12.
I don't have that information in front of me on the top of my head, but I would want to, be very happy to follow up and
Well,
get
we
to
need that information, and that's kind of frankly the information you should have had at your on the top of your head and in front of you when you come to, it's only 12. That's the kind of stuff we need to know. Now,
Sure.
I understand on the 20th of November and the 23rd of December, we sent you letters requesting documents. And staff had told me earlier this week we had not received those documents. Were the stuff we requested, was the stuff we requested in the document dump you gave us yesterday?
I believe that we have been working with your staff, prioritize
That's not my question.
what.
I understand we got a bunch of documents last night. I want to know if they specifically in that dump of documents we got last night, is that what we requested in the November 20th and December 23rd letters to you?
So.
Because we want that information.
Yeah, so what were the specific documents that you were referring to? And I can let you know if they were in the document dump, or at least I'll.
Well, there's a number of things we haven't got. The corrective action plans for current operation, for some of the current co-ops, documents and communications relating to CMS assessment and analysis, these site visits I was trying to ask you about.
Got it.
So we don't have that information. We want that information, and I want to know, did we get it last night, or do you still need to get it to us?
So
We've also subpoenaed that, by the way.
Yes, so some of those documents are in the document dump that you got from us. Others we have offered in a confidential review. I know that you have.
And if I could, Mr. Chairman, that's what I wanted to get to. So why in an in-camera viewing only?
So we feel strongly that these documents are market sensitive, that we have a fiduciary responsibility to the co-ops to allow them to operate on a level playing field with their competitors. These are tools that the State Department of Insurance use with every insurer. If we were to release
What
the
about
details of just the co-ops, that would put them at a disadvantage and further make it more unlikely that we wouldn't return taxpayer dollars.
But don't you also run the risk that it puts the enrollees at some kind of disadvantage? They're now maybe part of a co-op that's in financial trouble, and based on history and experience and the fact that half of them have already failed, and many of these, I assume, of these other 12 are in big trouble, you don't think it's important for the enrollees, the actual fellow citizens, to know what's going on?
So we share that information with the two entities that are most important to making the corrections, the co-ops themselves, and the State Departments of Insurance, which carry the voice of the.
But we're the Congress of the United States. We're an entity that's kind of important to know about this as well.
And we want you to know that we are doing our job, which is why we had your staff, and I know they spend hours with those documents, so that you know that we are doing our job here and are being pretty tough on the co-ops.
But our job is to stand up and represent the citizens of the country who want to know that information, and frankly, from a market standpoint and an evaluation standpoint, need that information.
And that's why you can have access to those documents if you need more time to review them.
Now I recognize the gentleman from Georgia, Mr. Carter, for 5 minutes.
Thank you, Mr. Chairman. Thank you for being here, both of you. I appreciate it. Dr. Cohen, in 2011, the current administration projected that the co-op programs would result in significant losses. And that was something that they projected, and it would be losses in taxpayers' dollars. Specifically, when this rule was proposed to implement the co-op program, they estimated that only about 65% of the solvency loans and only about 60% of the startup loans would be repaid. You had to be aware of this. Were you aware of that?
So I think you're talking about the repayment time, not the default rate, which is often called the default rate. So it's really about will they pay back in the time allotted, but we knew that the co-ops would likely need more time and have it.
And all right, well, you want to limit it to the time. What about the time? How many of them have paid back now?
So they are, as any loan, as you know, they're paying back their loan. For those that have closed, we are working through a process now to recover those funds.
Did you were aware of this? You said you were aware of this, and because it was part of the proposed rule to implement it. Mm-hmm. Did you set up any kind of criteria whereas you would assess the financial viability of these co-ops?
Absolutely. The terms of the loan agreement themselves have quite an extensive amount of oversight process laid out for it. In addition, we have gone over and beyond that.
When did you do this? When did you set up this criteria?
The criteria when the loans were let before 2014.
You set it up during that time?
Yes.
And it was my understanding that it was developed after the recommendation of the HHSIG.
We certainly went beyond the terms of the loan agreement to do further oversight, and yes, appreciated the OIG work saying that to do enhanced oversight, which we have. I don't think anyone can fault us for, in terms of how many folks are on corrective action plans or enhanced oversight. We're visiting these folks, we're calling them, we're pretty hard on them, frankly.
The Inspector General of HHS, he found that all but one of the co-ops had lost money in 2014. CMS was aware of this, that almost all of the co-ops incurred losses in 2014. If you were aware of that, and some were already shutting down, why did you continue to award the taxpayer dollars in loans?
So you needed to.
I mean, if you know you're on a sinking ship, well, you gotta. When I first entered the Georgia legislature, one of the things they told us: when you're in the hole, stop digging. We're in the hole here. Why are we still digging?
We share your concerns here. These programs certainly have challenges, which is why we've been doing the extensive and aggressive oversight that we have. What I would say is that when we are looking at what the co-op is doing, it's a totality. It's what is their business strategy?
When you talk about totality, though, 12 of the 23 co-ops have already closed. 12 of the 23. Anybody in business would pull the plug on that immediately. But you continue it. Why is that?
Well, we look at each individual situation, as my colleague mentioned.
And I hope you look at each individual, and I don't mean to interrupt, but with 12 out of 23, come on.
Right, and that's why we're working hard to make sure the other ones are as strong as they can be, but they're small businesses. As you know, small businesses struggle at the beginning, particularly.
I know small businesses. Trust me, I'm a small business. I own a small business. I struggled at the beginning.
Yeah, it's tough.
But I didn't fail. I continued on.
And that's what we're trying to do with the co-ops that are
Yeah, but
currently in
I met
existence.
my obligations. I didn't close. I mean, if you got 12 out of 23 closing, it would appear to me that you've got to say, hey, wait a minute, something's going on here. This isn't working. And we're talking about taxpayers' dollars again, that we in Congress, we're responsible for this. We're the ones who have to answer for this. So I'm asking you, if you've got 12 out of 23 that are closing, why are we continuing this?
And the original reason for the co-op program was to provide an additional choice and competition. So where it is working, where they are viable, we want to support
Where
them.
are they working?
In the 11 places where they're still existing.
That's not, are they working in those 11 places?
Well,
Just because they haven't gone out of business doesn't necessarily mean they're working.
We agree with you there. They certainly have some challenges, and so we need to stay on top of them, and that's what we're doing.
What about the $1.2 billion in loans that
That's
were
what-
awarded to the 12 closed co-ops?
Yep, that's the process we're working through right now.
What about it? Where's the $1.2 billion?
Well, some of that obviously went to pay for actual medical care for the consumers that were enrolled in
Are
those
we going to
co-ops.
get it back?
We're working to get every penny we can.
Are we going to get the $1.2 billion back?
We're going to use every tool at our disposal.
Are we, yes or no? Are we going to?
Obviously, some of that money was spent on actual medical care for consumers, so
We're not going to get it back, are we?
we're going to try to get every dollar we
And do you think we'll get half of it back? Do you think we'll get a quarter of it back? You have
can't
any
say.
idea how much of it we'll get back?
I can't say at this point.
12 out of 23.
Understood. That's right.
Thank you, Mr. Speaker.
Thank you.
Recognize the gentleman from Mr. Pennsylvania, Mr. Cartwright, for an additional 5 minutes.
Thank you, Mr. Chairman. And Mr. Chairman, the last thing I want to do is hold myself out as the adult in the room, but we've had
Certainly not.
we're not going to put that to a vote, Mr. Chairman. That's right. But we have had a discussion about the release of confidential information, and I'm concerned about that. I'd like to reiterate my concern that the committee not release any confidential regulatory information that we've obtained about the remaining co-ops in a way that could mislead consumers about the insurance companies in their states. I think empowering consumers through transparency is a good thing, and you don't hear many voices louder than mine on the issue of transparency. But that's not what we would be accomplishing by releasing this information. In reality, it would be misleading selectively to release information about currently operating co-ops that have been placed under corrective action plans or enhanced oversight plans by CMS. Mr. Ridner, I see you nodding your head. And isn't it true that state regulators like yourself frequently do enter into consent orders with health insurance companies to address issues raised by consumer complaints like billing or claims practices, right?
Absolutely we do, yes.
But it's also my understanding that this type of regulatory action is typically kept confidential until a resolution's been reached.
Correct.
Okay. And in fact, yesterday, the committee received a letter from the National Association of Insurance Commissioners. You remember that, I take it?
Yes, sir.
And here's what the NAIC had to say, and I'd like to ask unanimous consent to enter that letter into the record, Mr. Chairman.
Without objection.
They said this: for the sake of the 11 co-ops that continue to operate in our states, we encourage all congressional members and their staff to heed the confidential nature of some of the financial information that may come to your attention. Divulging information on state actions or the financial status of any plan that is not public could threaten the long-term success of these plans, unquote. Now, Commissioner Redmer, as a state insurance commissioner, do you think it would be harmful to release information about any cap or EOP for the remaining co-ops?
I do. It's easy for a competitor to take a nugget of information and throw it out there out of context and create an unfavorable adverse effect for that organization.
And not to put too fine a point on it, I really don't think I'm the only adult in the room, and I look forward to working with the folks across the aisle to be responsible with that information. I also want to follow up on the question of recouping funds. Dr. Cohen, roughly $2.4 billion had been loaned to all the co-ops. Is that correct?
That's right.
But only half of that amount has gone to co-ops that have wound down. Am I correct in that?
That's right. That's
Okay.
right.
And then the remainder of the loan funding, money that had been lent to the co-ops that are still in operation, is still being serviced, right?
Sorry, repeat that.
They're making payments on
That's
the
right.
loans.
That's right.
And Dr. Cohen, what is CMS doing to recoup loan funds from the co-ops that have, in fact, wound down?
To recoup the funding for the co-ops that have wound down, we're going through a process right now. We know about our obligation to the taxpayer. The recoupment process is dictated by the terms of the loan agreement as well as state and federal law. The Department of Justice leads that process on our behalf.
Okay. Now, there's a fellow named John Morrison, who was a former president of the National Alliance of State Health Co-ops, testified before Congress on this issue in November, and you're aware of that, I take it. Now, he suggested that consumers in states with co-ops have already saved more money through lower premiums than the total cost of the entire co-op program itself. He also noted that these savings are passed along to the federal government, the taxpayers, in the form of lower subsidy costs. Dr. Cohen, what do you make of that statement?
So I don't know the data, but again, we agree with the concept.
Okay. And Commissioner Redmer, what is your perspective on the capacity of co-ops to save consumers and the federal government money?
I believe that competition is a good thing. And again, to go back to my earlier statement, the broader conversation is not just about co-ops. We've got small, new, emerging, privately owned carriers all around the country that could be adversely affected specifically because of the risk adjustment formula that aren't using any taxpayer dollars at all.
Well, I thank both of you for your testimony here today.
And I'm sorry to cut the
Yield
gentleman
back.
off, but we have to go vote on the Cartwright of Pennsylvania amendment, whatever that is. We now recognize the chairman of the subcommittee, Mr. Jordan, for 5 minutes for the final question.
And we don't want to miss an opportunity to vote against that wonderful amendment, I'm sure. I'm kidding you. So, Dr. Cohen, of the 12 left,
Yes.
how many of those are under corrective action plan enhanced oversight?
8.
8. So your position is that there's certain information that can't get out because it could somehow jeopardize the ability of co-ops to survive. I just fail to see that. 23 started, 12 have already collapsed. Of the 12 remaining, 8 are under some corrective action plan. And somehow if we get information about enrollment projections and profitability, that's going to ruin the reputation? I mean, really?
Well, again, I'm happy to share that information with you, Chairman.
No, well, let me ask
outside
another, somehow,
the public setting.
if consumers get that information, that's somehow going to hurt them?
Well,
Seems to me that's the kind of information they need to know, so they'll say, look, this thing is going down. I need to run as far away from this. I need to get insured somewhere else.
That's really the job of the State Department of Insurance, to be the ones to certify whether or not the insurer has the ability to sell a product.
What are
on
these
the-
caps? What is in this corrective action plan? What is that? Is that a letter to them saying, hey, things don't look so good, you got to change some things? What is that?
Yep, it's a pretty detailed plan saying we've identified these
Detailed in what
particular-
area? Give me some examples of things you require people, these co-ops to do to change, to
Sure.
correct the.
We identify operational issues that they have, whether it's on their management team, how they're doing vendor oversight, what they're doing with their provider networks, how they're pricing their product, their business strategy. It could be a range of issues.
So it's our understanding that the very things you just outlined that you put in this corrective action plan for the 8 of the 12 who are still out there, the 12 who collapsed had the exact same plan sent to them.
No, they were all tailored individually to their situation. Some of them, we realized that we couldn't identify a correctable issue, and that frankly, we went straight to a wind down process with some of them.
Is it your opinion that, and then I'm going to yield to the chairman for the remainder of my time, is it your opinion that the 3 who are currently still operating and not, or excuse me, it would be the 4 that are still operating who are not under a corrective action plan, are they going to be around at the end of the year?
So again, too early to tell in the year. We're just looking at their Q4 data from
Can
the
you
end of last
guarantee
year.
us that those 4 who aren't under a corrective action plan, so of the 12 surviving, the 4 who aren't under a cap or enhanced oversight, can you guarantee us that they're going to be around?
So we will continue to do our oversight of them in a very strict way, and as new information comes up, if we need to, we will put more folks on corrective action
So
plans.
it's
to
likely that those
identify.
4 may go on a corrective action plan too?
It's too early for me to know. I think that's the work ahead of us.
I yield to the chairman.
Dr. Cohen, you make any contingency plans for any of the currently operating co-ops to shut down during 2016?
I think a lot of our oversight work is in of itself the planning that we're doing, trying to identify issues with them.
Are you taking any specific actions to prepare for the possible shutdown of any of the currently operating co-ops?
I don't know exactly what you're referring to, but I think the work that we're doing on the oversight work is that contingency planning.
Does it bother you that I think it's at least 4, maybe as many as 7 of the co-ops that have already gone out of business or winding down never went on a cap to begin with?
Again, if we identify something we think is correctable, reversible, addressable, we put them on a cap. Others, we recognize
Have you ever
that
corrected,
wasn't-
reversed, or fixed anything under any of the caps?
So these are things that are structural to the program, as I mentioned, some of the
I understand
things,
what they are. I'm
whether-
asking if you fixed them.
So they don't fix overnight. These are things that take many months.
And you've had many months. You've had some of them under caps for many months. Have you made any improvements?
Yes, I think some of them have certainly made some improvements in their vendor management and in the way that they're looking at their operations and the way they're looking at their provider networks, yes.
Several times today you've mentioned that you take a seriously hard look at the co-ops, that you aggressively work on oversight, you have strict oversight. Do you believe that you're entitled to see anything from the co-ops that this committee and this Congress is not entitled to see?
Again, we are happy to share with you any
I understand
of the
that, and I
information.
appreciate that. Do you believe that you are entitled to see anything that we are not?
No, again, we're happy to share with you the information that we can see.
Mr. Redmer, the last question. I understand the concern about going public with the information. Evergreen chose to go public in November of 2015 to a committee of this Congress that it was under a cap, didn't it?
They went to go public, I'm sorry, say again?
They made public statements in Congress to one of a committee of this body that they were under a cap.
I don't know whether they did or not.
I can assure you they did.
But I can tell you that discussing the cap is not of concern for me as a regulator. What's concerned of me is disclosing confidential proprietary information that could be used against them in the marketplace by just passing out nuggets that might be out of context.
Fair enough. I thank both of you very much. I'm
Thank you.
sorry to wrap this up very quickly, but as you can see, we've got 7 minutes to run across the street. We'll hold the record open for 5 days for any member who wants to submit a written statement. We thank the witness. There being no further business, and without objection, we'll stand adjourned. Thank you very much.
Thank you.
Screw anything up, Natalie? Nope.